Cool. And then my Discord should be streaming the right thing. Okay. So the way MAs and EMAs and all that nonsense works is that if I add it into here, if I go trend 1 and trend 2, I should be able to see it on this chart. Oh, it's not giving it to me. Let me just add it in real quick. Oh, there we go. So like this is an EMA, right? This is a MA. It's a moving average, right? This green line over here. All it basically does is it shows you which way the momentum of the chart is moving. So, like, I don't necessarily trade using MAs. I used to back in the day when I was trading different algorithms and whatnot. But MAs essentially just tell you, okay, the market's moving in an upwards direction. It has upwards momentum when it's above the MA. But then when it's below, like over here on this red section, you can see it's below the MA. And all it says is it's that this market has a downwards momentum, right? So the main bias that what people tell you to do is they tell you to sell the market when it's in the red or when it's underneath the MA. And they tell you to buy the market when it's above the MA because it's got upwards momentum. So you're going to buy with the trend and you're going to sell with the trend. And that's all the EMA really does, or the MA. It just tells you which way the trend is moving. So you can kind of get a better bias on what's happening, kind of. If that makes sense.
Okay. So now this is like based on smart money concepts, obviously the system that you're using.
Yes.
Okay. But now do you actually trust any of the smart money concept indicators like
Lux Algo and whatnot?
Yeah.
No. So
okay.
The reason why is because unless the indicator's trusted and back tested, no.
Yeah.
So the only indicator that I use at the moment is MDX Algo's indicator. I don't know if you know MDX. He streams on YouTube. He has these algorithms. So the bottom is it's basically just an advanced version of a stochastic RSI, and the top one is the same. It's an advanced version of a stochastic RSI. I do open them up every now and then. I don't trade solely based off of these. I just use them for extra confirmations and whatnot. I trust this algorithm. Only reason I trust it is because it's tested and back tested. So it's back tested since pretty sure it's 2017. It's been back tested since 2017. It shows you a lot of information. And every now and then I'll double click on my chart and create basically an oscillator sandwich between my chart. But I'll only ever do it when I really want that extra bit of see how much is this market oversold, how much is this market overbought on like daily timeframes, for example. I'll use it on higher timeframes more than I'll use it on lower timeframes. But the problem that you have with stuff like the Lux Algo, if I just grab it and put on my chart, can I put on my chart? Do I need to buy? I can upgrade it. There we go. It's on the chart now. Okay, so Lux Algo is currently on this chart, right? So you can see, let me go to a clean chart real quick. Okay, so you can see it's marked off all of these zones, right? But the problem with this is that if I replay, actually wait, let me go to like a 4-hour time frame because this rarely anyone will ever trade on the daily. Let me replay till here because I know that it'll add some zones in. I'm just going to let this chart just add in some zones again. So you see this blue zone over here, and it's blue zone at the bottom. Right, if I play this chart out, you'll see it breaks that zone very quickly. Boom, just like that, right? You see how over here, this zone was valid. The zone was valid, right? It was still valid, but it never tapped into it. So you would never have actually gone long off of the zone because we never actually tapped the zone. We never got inside, right? But like 2 candles later, if I just play the next one, a few candles later, all of a sudden you see it doesn't come into the zone quite yet, but then it drops it instantly in one candle, 1 4-hour candle. But the problem with that is that 1 4-hour candle would have dropped the zone, giving you no confirmation. But on the 1-hour time frame, you would have taken an entry, right? Because it takes a while for a 4-hour candle to go from up here to down here. So there would have been a time where it was trading inside this zone, and you would have gotten a long entry in, but essentially that zone would have then not been respected. And the only problem that I have with people trading like smart money concept indicators is that you don't know why it dropped the zone. You're not actually
Yeah.
learning why the zone's being dropped or what zone to respect or what zone to watch. And you'll find it quite often is that when you have these these smart money concept indicators that are like printing out zones, as soon as the zone gets broken, it removes the zone, but you'll never know if it's going to bounce or not. So you can literally watch this play and watch this remove and add zones as it plays out. See now that zone got invalidated. Now there's a buying opportunity over here, and I'm pretty sure that if it comes down to this buying opportunity here, it'll like you can even see how it's just pushing through these zones. There's like 4 lost trades there, 5 lost trades, 6 lost trades, 7 lost trades. Let's see, 8. Now you see, like I'm just literally counting how many times you would have lost if you just bought or sold the zone. And
Yeah.
at that point, you're just putting too much trust in the algorithm. You know what I mean?
Mm.
Cool.
Okay. All right. Let's just see here. Yeah, because I'm like, yeah, I really want to start off trading again properly. But do you think it would be better for me to start on Forex? Is Forex like any, I won't say easier, but is it more like structured compared to crypto?
Uh, I can tell you this: you'll lose money both in both markets if you don't know what you're doing. But Forex
Yeah.
will give you more setups on a daily basis. But
Okay.
but there's only a but. So Forex will give you cleaner setups, but it will
Mm.
it will try to trick you more often. Right. So because smart money concepts is a strategy that's based off of the foreign exchange market, like here, you can see that these zones are quite respected very often. But the thing is that if I go to gold, for example, you see gold is respecting this 4 hour zone, right? But the problem is that they will sometimes trick you. So you see how on the 4 hour, you might have gone short in this area. But if I go to the 1 hour or even the 30 minute, if you try to look for an entry here, there is no entry on the 30 minutes, right? So you have no entry yet. So there is no confirmation just yet. So you need to actually understand that the strategy you're trading, you need to understand it in and out, and you need to have discipline, right? So I never entered on this 4 hour zone, right? I trade gold like religiously. I like to trade gold.
Yeah.
So I never entered on the zone because I don't have a lower time frame confirmation that we're going down. Because we could very well just create like a massive wick, like a candle that just wicks up like this, and then like grabs liquidity on the top side and then closes bearish. Like you could get a candle like this, right? And I don't want to get caught in that candle because I would lose a lot more. Because in Forex, like people say it moves less, but the problem is you risk more. So you're actually losing more, depending. Yeah.
Okay. Um, let's see. So, like to learn this strategy like properly. Okay, like like where do I start? Like to learn it like from scratch, like properly.
Okay. Um, so if you want to do it like like what I say, if you want to do it the right way, is you would
Yeah.
start with like a simple step-by-step program. So you would basically, let me go to a clean chart again. Just going to go to the S&P 500 real quick. Yeah, S&P 500. Okay. So you'd want to learn everything step by step because the smart money concept like plan isn't so much of a strategy as it is more of like a trading plan. It's a whole bunch of
Yeah.
confirmations that you get before you take a trade. So what you need to know to trade SMC is what I'm just going to make over here. So the first thing you'll need to understand is market structure, right?
Yeah.
So you need to know market structure first. So how do you identify an uptrend? How do you identify a downtrend? What makes a market uptrending? Like on the 1 hour time frame, and an uptrend might be a retracement on the 4 hour. So for example, if the market's coming down in a 4 hour, but you go to the 1 hour and it's uptrending, that just might be a pullback to continue going down. And you need to be able to spot those things, right? So I'll give you a clean example of that. Is if I go to this chart over here, you see on the 4 hour how we are reversing like this, right?
Mm-hmm.
You see that this is just like a bit of a reversal to come down. If I go to the 1 hour or even the 5 minute, right? You see a completely different structure to what the 4 hour is giving you, right? The same way, if you go to any chart and you try and find, you see this market's coming down here, right? You can see that there's lower lows being made in this area of the chart here. Whoops. in this area of the chart here, you've got lower lows being created, right,
Yeah.
and lower highs. But I can tell you now, if I go to the 15 minute, it'll be an uptrend. Yeah. So you see how this is an uptrend. So the problem with this is that someone will come along and look for a buy in the market when the overall trend is down, right? So then they'll get stopped out and they won't know why because they didn't look at the higher time frame bias to actually think, oh, I'm actually looking for shorts, not buys, right?
Okay.
So that's what market structure is like, kind of in a nutshell, is understanding the bias of which way the market's going to go, understanding that higher time frames do not, or lower time frames do not mean that the higher time frame will respect those zones. It just, I use lower time frames to get entries, not to mark off a chart, right?
Yeah.
So that's the first thing you have to learn. The second thing you need to then understand, let me actually just grab out my notebook, um, grab up my notes, and then just make sure that I'm giving it to you in the right order. So you need market structures that basically identifying higher highs and lower lows, swing highs and swing lows. Then the next thing you're going to want to try to understand, and I will give you links and whatnot on where you can find this information. But the next thing you want to know is supply and demand, right?
Yeah. Mm-hmm.
Um, you don't need a degree in economics to understand that for a market to move or for there to be any type of economic data or economic movement in the world, for there to be an economy, you need supply and demand, right? You need someone to buy something or someone to sell something, right? Even tracing it back to like the Roman Empire, right? Those guys would take their sticks and go to Rome and buy apples because they thought apples were cheaper in Rome, right? So
Yeah.
supply and demand. The supply and demand can also be known as the exchange of hands, right? So in some strategies, people will refer to supply and demand as the exchange of hands. So simply put, it is just if I'm trying to buy the market and someone's trying to sell, I will literally buy into his sell and he will take my position from me because I'm on the wrong side of the market. So the hands are exchanging, right? The next thing after supply and demand is order blocks, right? So order blocks is like the most, how do I say, like everyone tries to learn order blocks first. That's like the wrong order. Everyone comes into small money concepts and they're like, order blocks, what is an order block? Like what, how do I, like what is it? So if you're trying to trade order blocks before you understand supply and demand and before you understand market structure, you're going to fail. Every single time you're going to fail, right? The reason I'm saying that is because if I just come to gold real quick and I go to a lower time frame chart, I'll show you clear as day. I'll show you, yeah, right? Let's go replay. Let's do this. Let's go to the 15 minutes, right? I'm going to play this market out, right? So an order block is a candle in which it's basically a indecision candle between an expansion, right? So a doji candle like this candle here would be an order block, right? But that's what people tell you it is. So if I mark this off, right, I would be looking for sells at this level. Okay. If I play this market out, let's see, right? Even here, right, there's an order block over here, right? There's a doji candle before a sell-off, right? So people would look for sells over here. Right, cool there. I'm looking for a sell there, looking to get that move. If I play the market out, you'll find that it pushes straight through. You see, I just didn't respect that entire zone with one candle, just push straight through. So now the average person that just went and traded order blocks would have been like, why is it going through my zone? You can even see over here. If you entered over here as well, you would have gotten stopped out again. Right. So now you lost two trades in a row. So now you're like, oh, the strategy doesn't work. But it's like, because you don't understand supply and demand and market structure, you didn't understand that this was a demand zone in the 4 hour. Right. So do you see how that's important? Like the 4 hour time zone, this is a demand area. The market wants to move up from here. So trying to look for sells in the 15 minute off of order blocks that don't exist over here is a bad move already, right? So understanding market structure, you can then go in and even go to the 1 hour time frame and say, okay, cool, waiting for a higher high. Then you say, okay, I got my higher high over here. So the market was downtrending, made a higher high. So that's a sign of strength. Now I wait for a pullback. So now I say, okay, cool, that's a nice order block in between an expansion, right? That's a very strong expansion that broke a high. So I'd wait for price to come down to there and see what happens, right? I would see what I wouldn't just enter the market. That's just not very smart. I would wait for price to tap it and see what happens. So I'll actually just play it out. Does it come back? No, it doesn't come back, but it pushes up again, right? But that would have been the strategy. Instead of losing 2 trades, you didn't get any trade, but it's better than losing. A trade not taken
Yeah.
is always better than a trade lost, right? But
Mm-hmm.
that's kind of how it works, is you could have gotten a buy in on this 4 hour area of demand because it was this demand zone, right? So that's the reason why we do order blocks third, why we always tell people to do order blocks third. The next thing you want to understand on this strategy is, let me flip my page. And then those are just basically patterns that you don't really know. Liquidity is the most important one as well. So the fourth thing you want to know is liquidity. All right. Do you have any understanding of what liquidity might be, like just out of interest?
Um, like where the stop loss and stuff would be, that kind of thing.
Yeah, it's the buildup of stop losses.
Yeah.
Yeah. So essentially, understanding liquidity is literally just understanding that when you have a buildup of stop losses, the market wants to take it out. Right. So you can see it here. The market wants to take out these stop losses. But the way you trade liquidity in Forex is completely different to the way you trade it in, um, like, not crypto really, but like in retail strategy. Like the way you trade, liquidity in smart money concepts is completely different to the way you trade it in like retail trading. Retail traders are taught to buy the breakout. So buy that breakout over there, right? And then put the stop loss down there. And you would have waited like a while before the move actually happened because it came all the way back to entry and then into like drawdown a little bit, and then it went up. Whereas the smart money traders taught to wait for that move to come back. There's another demand zone. Take the entry off of the demand zone, right? So the smart money trader wouldn't have gotten this breakout. He would have gotten the retracement, right? And then on top of that, the retail buyer is probably thinking gold's going to the moon, right? Gold broke this trend to the upside. Over here, this long trend that it's been creating, it broke it to the upside, retested, and went up. That's a clean move, double bottom, even um, kind of a double bottom almost. And boom, now gold's mooning. People probably literally sitting on Mars right now, thinking that gold's going to go up, but no, the liquidity is taken. The market has no more reason to move to the upside. But what I can tell you here is that there's liquidity sitting here that the market needs to take out, right? The market will always move. It will always have a reason to move. It won't just move for nothing, right? So
Yeah.
whenever the market goes up or down, there's a reason why it's going to go up or down. There's a target that needs to get hit, or there's orders that need to get filled, or there's demand or supply that are taking over, or there's liquidity that needs to get taken. Right? The markets don't just move. If the chart has proper structure, like any forex chart has proper structure, Bitcoin does have decent structure. But if you're looking at it on that level, it's kind of like you don't ever see the chart just move. It has a reason every single time. Um, like here, this chart can come down because there's equal lows, right? But the problem with this
Yeah.
equal lows is that literally right before it went up, this candle came and took out the equal lows. So right now, it doesn't really have a reason to come down on the 15-minute, but on the 30-minute or the 1 hour, it does because it's tapping into that supply zone again. So it all comes back. Like every single time I tell you one thing, it all goes back to market structure and understanding what the higher timeframes are and how you should trade the lower timeframes off of it. So yeah,
Okay.
that was a long answer.
Okay. Um, yeah, I think that's about all. just like basically starting from the beginning again, and
Look, like,
yeah.
oh yeah, I wanted to tell you. Oh wait, let me add one or two more things here. That's not that important. Actually, I'm gonna add this in. Actually, that's not the last thing. Uh, I'll add this in at the bottom. I'll add number 5. This isn't very important. But you need to understand fair value gaps. It's unmitigated orders, but it's like I don't trade solely off of the fair value gaps. I just use it on a chart to just have it there, so I can see it. Not very important. Another thing that you need to understand is world economic data. So, for example, what makes a country good? For example, like economic growth, monetary policy, fiscal policy, geopolitical events, how does a country measure its growth is quite important. So you kind of have like a general bias of, oh, this market's doing good or this market's doing bad. Um, Great people that I could recommend you watch for these types of videos.
Yeah.
This guy
Oh
and
yeah, you mentioned him in the last stream. Yeah.
yeah. So those two people there. Lorenzo Corrado is the guy that taught me majority of what I know. Track Effects just does very, very good YouTube videos, and they well explained YouTube videos. And he has a ton of them. Not even gonna lie, he has a
Yeah.
ton of videos.
Yeah, I saw them in the educational videos on this one. I did see some of them there. Yeah.
Yeah. So if you ever have some free time, just do it step by step. Watch a market structure video, and then don't just like watch the video and then go trade. Watch the video and then go and like chart to chart and see if you can do it.
Yeah.
Hmm. Yeah. So how were you at the oh wow, I just clicked and everyone's in this voice chat right now. Um how did you come to the sniper meetup? The one that just happened, like the previous cohort. Were you at the Banter Studios?
I was no. I'm in London, but I did cohort two, um, with. I just like literally went through all the information. I did the live streams, but I haven't actually traded of any of the of any of the like
Yeah,
their stuff. Yeah.
completely understand. Wait, so you're in London. Do you have an African accent? Am I hearing that
Yeah.
correctly?
I was born in Cape Town. Yeah, born in Cape
Okay.
Town.
Okay, now I just had
Yeah,
to check.
but in London now. Yeah.
I just had to check.
Yeah.
We can see Bitcoin's breaking now. If we get a 4 hour
I see
closure
it.
above, then it's gonna push again. But I've got a feeling what's happening. Everyone in the chat right now, just got a feeling right now that if you go into the mentor charts, I'm just gonna stream my screen real quick. And then I'm gonna flip this recording as well. Oh yeah, by the way, I am uploading this recording. So you will have access to view it again if you really wanted to. But
I do.
if you okay, everyone should see my screen. If you go to the mentor charts right here, right? Actually, I'm lying. I posted it in the VIP chat. Uh, here, here, this information here, right? So you can see the Bitcoin long to short ratio on the 24-hour is 46% short. I mean, 46% long, 53% short, right? Majority of the market is short right now, right? You can see here, Binance retail is majority short, and Binance top traders is majority long, right? Bybit's kind of basically 50-50 with top traders and retail. But the problem here is that because we have majority retail short, that is exactly why the market just pushed up. Let me quickly just find trading view. There's trading view. That's why the market pushed up, right? They're trying to get the retail traders out of the market. That's why you can see all the top
Correct.
traders are currently long, right? You can see on the information here, top traders over here currently long, 53% of them, right? So you've got majority of the guys that know what they're doing going long. Retail guys are going short because they think the market, like simply put, the market literally had a rejection. It came back up. They're like, oh, it's going to go down again. No, they're going to stop them out before they bring it down again. So what I said earlier in the VIP voice, not the VIP voice chat, in the VIP crypto chat, was I can see a push up to 25.3. This message exactly reads, use this information as you please, but the majority of the market is short. I can expect a push to 25.3 to create a fake out to take the shorts out, and the market can then follow with a reversal. Be careful with taking trades right now, right? So CPI just came out, and yeah, we are seeing that play out pretty well. USDT dominance is pushing to the bottom side again. I was expecting us to reverse off of this area over here because we did get some sort of support, but we didn't turn it into a very good kind of support, right? So we just bounced on it. We didn't bounce upwards. We just got some sort of support, right? So what I was looking for was a support and then bounce up, right? We didn't get that. We just got support and a push down again. So what we can see is a drop, base, drop, base, drop. right? Which we often see in crypto very often is we see like drop base, drop base, drop, or like rally base, rally base, rally. And you can't really trade these because you don't really know when they're going to break out. They just happen all of a sudden. And then they push so like vigorously and they expand so hard that you can't really catch the move. But an area I'll be looking out for is this area down here at about 6.4% on the USDT dominance. Another thing I also do want to share, so the CPI data just came out, and I just want to stop streaming my screen on this recording for like 2 seconds. I'm just going to open up something. Boom. Okay. Just had to like scroll through to a different tab without everyone on the recording seeing what I was, my entire account. Or one of my accounts actually. If I go to forexfactory.com and I go to the calendar, I think the CPI data just came out and it was as expected. Yeah, CPI data came out as expected, so there was no real significant change that the market was expecting, right? So if it comes out as expected, we can expect it to push down, right? So this is the dollar index currently. If I go to the daily time frame, you can see that we have just started a leg to the downside in this expansion up, right? We made a higher high, so we can push higher to this upper zone here. But the problem with this is that we have to find support somewhere so we can go up again and before we come down, because we have to come up to retest these levels. And if we come up to retest these levels, Bitcoin will find some sort of bottom, right? But at this current time on the 4-hour time frame, is if we need to find support somewhere, which could be anywhere, like it could be this zone here. But if we come down to here, Bitcoin could go like 25 or like 28 or 30. If it comes down all the way to here and then reverses to the upside, then Bitcoin can get that lower low that we were all expecting. But it all depends on what the dollar does. I'd watch the dollar on the 1-hour time frame, try and keep an eye. It looks like it wants to find support, but we can't say just yet because there isn't a higher high, right? So the higher high that needs to be created is over here, right? So the dollar never made a higher high. We're currently printing in a range right now. Okay, so this is the range high, this is the range low. We need it to expand down or up, right? If it expands up, I would watch this upper zone here before it comes down. That'll send Bitcoin down and then up again, right? So if the dollar goes up, Bitcoin goes down, right? So it's an inverse correlation. If the dollar goes down, Bitcoin goes up, okay? Same with USDT. If the USDT goes up, Bitcoin goes down, right? It's inverse correlation. So that's why I'm watching this chart right now. Looks like it wants to make a massive push to the upside. I wish I was still in my long from 20,700, but I did take profit and I did secure my trade because I was with the retail when I said I don't think we'll break above 25. But we'll see. It looks like we're getting that push right now. If we do come down to retest and then push up again, I'll get that entry. But we'll see how this candle closes. They could actually just reject this candle to the downside and close underneath the line. But we'll see. We'll see. We'll see. A lot of people are getting excited now. A lot of people are sitting on the moon, like I said. But yeah, it is what it is.